So in this section of the course, what we're going to do is just dive a little bit more into some background on the self-storage industry so we can understand a little bit about the history, the types of customers that use it, and just a general overview of the industry. Okay, so self-storage history. Of course, people have been storing stuff for thousands of years, at home, in their mud hut or wherever they lived, in a cave. But really, the industry kind of started with initially what were small warehousing space. And then in the 60s, what happened was this kind of typical self-storage unit that you see now was created. The garage style door, a private little unit. It's basically a mini individual warehouse. And then this style of storage started to roll out, and by 1979 there were over 3,500 of these mini warehouses nationwide. So the industry has grown from then until now, where we've got well over 50,000 self-storage facilities around the nation, more than all of the McDonald's, Starbucks franchises, etc. combined for the main big franchises. So there's a lot of storage out there, but still, the amount of storage space used per capita, and we'll cover that in more detail, is around 8 square foot per person. That number has also grown. So not only has the amount of storage facilities grown, the demand has outpaced the growth in many places, in the sense that more people are using storage, population's increasing, and then families are moving more frequently, they're more likely to be remote, which is creating this opportunity in storage as well. So yes, since the 60s, 70s is really the kind of foundation of storage, and it's grown since then. And so now we're in a position of 1 in 10 people in the US uses self-storage. As I said, there's 50,000 plus self-storage facilities, with the vast majority being owned by mom and pops. So the REITs control around 15% of the facilities, and then the 85% is the mom and pop. So you have a single owner of a single facility, or they may have a couple of facilities. There's very few large players that own big chunks of storage. So that's why it's such a great opportunity. The vast majority of assets are still owned by an individual, and you can buy those and create a portfolio of 5 or 10 assets to generate cash flow for yourself. So a typical size of storage is 50,000 square feet with 500 to 600 units. And most people are renting a 10 by 10, which is 100 square feet. And total in the US, you've now got 2.3 billion square feet of storage, which is 3 times Manhattan Island, and it generates over $40 billion a year in revenue. So it's a huge business. It's continuing to grow, and the future still looks very bright. I mean, that 40 billion is expected to continue to grow at substantial rates over the next decade. The largest players in self-storage, just to give you an idea, these are all public companies, REITs. So Public Storage is the #1 largest player in the industry. They have 212 million square foot of storage space across 3,000 facilities. Extra Space, 160 million square feet of rentable space across 2,000 facilities. CubeSmart, 87 million square feet across 1,200 facilities. And then Life Storage with 78 million square feet across 1,100 facilities. These are huge companies. But even though you have these huge companies with thousands of facilities, the vast majority of the market is still open to you as an investor to buy self-storage. So what this presents is, if you can pull together a portfolio, these REITs maybe in the future will be a buyer for some of the assets that you then consolidate in a portfolio. And from our perspective, what we're building is a fantastic portfolio of great self-storage facilities that could one day potentially be public or acquired by a private equity or REIT itself as well. So the types of facilities, generation 1, simple outdoor bays. Generation 2, gating, security was added. Generation 3, we had the air conditioning units coming in. Generation 4, we're looking at these multi-story facilities where everything's inside, whereas before, you kind of drive up and put your stuff in. And what we're finding is actually a reversal of this trend, that people are going from having these, everything inside one building storage units. They just want to drive up in their car, put their stuff in, get out. They don't want to have to go inside a building. And Generation 5, and what we're seeing now and going forward, is just better and better construction, better and better designs of facilities. So this is a very old storage unit. So, I'm just going to cover very briefly some of the types of facilities that are out there. You've got the typical single-story self-storage facility. Something like this can cost anywhere between $60 to $90 a square foot to construct. Drive-up units, everything from the 5x5s right up to the 10x30s or 10x40s. What you might have with this is also some RV parking, some car storage as well. And typically these are in suburban markets. They're not right bang in the center of the city. You've got a few more acres of land that you can build on. So it's a cost-effective way to build is to just have a single story and wider. What you find in city areas or much more developed areas is this much larger, bigger facility. Land is extremely expensive there, so they have to go vertical to make the numbers work. And 2, 3, 4 floors of storage where you may be charging customers a lot more if it's near the entrance and it's convenient, and then the discounted price if it's further in, or opposite. So you have a normal price if it's further in, and then people are paying a premium to have a unit that's near the door and easy to access. So there's a full range of types of storage facilities, from simple, a few garage doors, what it looks like, to these modern, purpose-built storage buildings, which in themselves act as marketing, because the vast majority of your customers are going to come from people driving past your unit. So the visibility is extremely important. Something like this is extremely visible. And what some people do with the single story is they add on an office at the front, 2-story office even though that second story is not used, simply to act as a banner, as marketing, so it's next to the roadside, people see it very clearly and easily and come in. And that can be a great return on investment, because as I said, the vast majority of your customers are going to be driving past you or seeing you and thinking, okay, so there's this storage unit that's on my way to work, I'm probably going to use that place because it's easy and convenient. They may call around for prices, but really that's probably the place they're going to go. So location and visibility are extremely important in this business. What are some of the benefits of having a brand new facility? One, well, you're going to have very low capital expenditures for repairs and maintenance, right? You're not going to have to constantly fix your facility because everything's brand new, and it's going to last you 30-40 years plus before you need to spend any significant money. So instead of having to reinvest that money, you've got this constant cash flow coming back. You can put in brand new remote leasing and superior access control. So the gates, people can book a unit online, get the code, get into their unit, and there's no human interaction. If you have to have managers on site, you're paying salaries. You're paying 60, 80 grand a year to someone to be there all the time, when customers only come sometimes and move in only sometimes. It's expensive. If you can do everything online through a remote office, then what you're doing is you're cutting a lot of these costs, which boosts your profit, boosts your cash flow, and increases the value of your property as well. So then the other thing is you can put in with a modern facility, it looks clean, it looks nice. If you're the brand new facility in a market where lots of facilities are outdated, where do you think people want to store their stuff? The new looking, secure looking, nice lighting, nice camera units is where their preference is going to be, as long as the pricing is reasonable. And storage is a commodity. People aren't going to be like beating you up to get you down $30 a month on a unit. They'll either take it or leave it. $100 a month for a unit, it's not unreasonable price. They're not going to shop around a huge amount. So really, it's your customer service, your location, your visibility, having a good product that brings people in, and then your pricing is somewhat protected that way. Also, by having a brand new facility, you're going to have reduced operating costs because the facility is purpose-built, designed well, and it allows you to build a unit mix in that market that matches that market. And a great thing to do is to check your competitors before you ever buy an existing facility or build or expand, to understand which types of units are most in demand. And with a brand new facility, you can design that unit mix for that market and also future-proof it by having a variety of different units. Some for small local businesses, for tradesmen that maybe need a unit to store some of their materials and goods, and lots of smaller units for people that just want to store a few items. So what are the typical customers for self-storage? You have individuals and businesses. And what we find is that individuals make up the vast majority of customers in most markets, but businesses tend to lease for a lot longer and sometimes even multiple units as well. They prefer the larger units too, 10 by 30 unit, for example, because they may be storing materials for their business, for their work. Rather than rent a whole big warehouse to themselves and have to cover all those costs and set it up, it's much easier to just have some space in a storage facility to keep some of the materials for their business. So, surprisingly, 72% of self-storage customers live in a single family home, not in an apartment. It's not like they're lacking space, but there's been a trend recently when new homes don't have an attic and they don't have a basement. And the garage, excuse my pronunciation, is maybe used for their car or recreational use. Surprisingly, they don't have so much storage space. If they don't want something in their main house, they have nowhere to put it. So they go to storage. And the main items that are being stored are furniture, clothing, household items, seasonal items. They don't have enough space at home. They may be moving, they may be downsizing, they may be going through a divorce. They may be in a death or for their business, or they may have a hobby like kayaking, or they have an RV, or they have a boat. Any of these reasons are the main reasons why people are storing items. And then usually the renters make up about 40-45% of your customer base. Again, surprising, right? You've got a homeowner, someone who owns a house of lots of space, still that make up the majority of self-storage customers. So it's a little bit counterintuitive there. And the vast majority are residential customers. Businesses make up around 15-20% in different markets. Typically, around half your customers may use your property for up to a year, and then the other half are using it for 1 or 2 years or longer. And for businesses, that's a much longer statistic of people using longer term leases. So for businesses, around 40% are using the property for about a year, but the vast majority, 60%, are using it for 1, 2 years, 3 years or more. And with businesses, they tend to have multiple units as well. So around 25% of those businesses, or 25% of your tenants, are also renting a second unit, which is fantastic. So when you're doing your marketing, when you're doing your adverts, you should also consider, how can I reach these small businesses, because they tend to be the best customers. They spend more, they stay longer, it costs you less to get them in the first place. So overall, they're much more profitable. So what does the future of storage look like? If we look at the trend in population, we've gone from 112 million households in 2005. We're now at almost 130 million households as of today. So we've got increase in the number of households. That's 18 million additional households. So that's 18 million additional houses that potentially need storage. Before, around 9% of the population would use storage. Now we're closer to 11% of the population storage. So we've got more people, more of those people are using storage. And then what we're finding is, from using 2 square feet per person, 20 years ago, people have more stuff. With e-commerce, with the change in how shopping has evolved, and people have so many choices for so many things, people are buying things, using it once, wanting to keep it and storing it. So the amount of space that those people are using has also increased. So you've got the triple whammy: increasing population, increasing usage of storage, and those people that are using storage are using even more space. So what we found since 1987, when occupancy was around 80%, now we're looking at 92-93% occupancy. Even though there has been a lot of new construction of storage, the occupancy, the demand has outpaced that, and the units have filled up over time. Of course, there are cycles in storage, and it's a very local business, so you do need to do the numbers for the facilities that you're looking at, and always look at it in a 3 to 5 mile radius around where you plan to build or buy a facility, because the market is that local. People don't travel much more than 10-20 minutes to get to their unit where it's available, right? So let's say you're in an inner city, you don't need to drive 20 minutes to your unit. There's thousands of different options close to you. But in the suburban markets, secondary markets, what we're looking at is someone doesn't really want to spend much more than 20 minutes on the road to get to their self-storage unit. So when you're doing your analysis, you're also looking at, okay, so how does this market look in this radius? How much competition is there? How many people are there? How many potential customers are there? How many square foot per capita of storage are there? It's a very local business. So overall, nationally, the trend is fantastic for storage. but always need to check your local market. What are the trends like? We found some markets, have fantastic futures. They're doing extremely well. We've got populations increasing, very low competition, very high rents. These are great markets. Others, what appear to be good markets, for some reason still have low rents and very high competition. So doing the checks up front can prevent you from basically not doing as well on your investment as if you found a great location. It makes a huge difference. So this work that you're doing with the course and then going through the materials and carefully selecting where you want to buy is important, but don't forget to pull the trigger. If it looks good on paper, everything's right, everything seems to check out, don't overanalyze, do your deal, do your second deal, do your third deal. You'll get better and better every single time.
For more information on commercial real estate investing, go to patriotholdings.com. Thanks for listening.